Hey guys, in this video, I'm gonna cover multi-time frame structure, right? So at this point, we've realized that we're gonna trade different time frames, right? We're gonna trade different time frames because the market has to offer different time frames, right? You get daily time frame, we got the 4-hour time frame, we got a 1-hour time frame, we got a 30 minutes time frame. So for most of you that are starting off, we're gonna probably ask yourselves, and if you're gonna have all these time frames, then how do you work around your way of trading? Right? Do you trade on one time frame, or do you choose like 2 time frames or 3 time frames or whatever time frames that you can work on? Right? So in this video, I'm gonna answer that question. Okay, so basically, when we mention multi-time frame, some people call it top-down analysis. It simply means analyzing the market or the charts from different time frames, right? So time frames are basically divided into two forms of time frame. Got the higher time frame and the lower time frame, right? The higher time frame, as the name implies, it gives us the long term perspective, right? The higher hours of the day, right? The higher hours of time. When I say the higher hours of time, I mean daily time frame, right? From the daily perspective, right? They give us a monthly perspective, weekly perspective outlook. That's in the higher time frame, right? So from here, I highlight what we consider as higher time frame, right? From the higher time frame, we consider monthly, weekly, daily, and 4 hour. Then lower time frame, we consider 1 hour, 30 minutes, 50 minutes, 5 minutes, and everything below 1 hour is lower time frame, right? So there's a note here where I say analyzing multi-time frame enables a trader to trade lower time frame setups that can be in line with the higher time frame to increase probability, right? So having a view from a higher time frame. So let's say, for instance, on a higher time frame, right? Like on this diagram, the higher time frame is bearish, right? See, the market is pushing to the downside, right? This on a higher time frame can look easy, right? Can look easy and proper and all that stuff. But when you go on the lower time frame, it's a whole different ballgame, because on the lower time frame, what you do have is price having different trends, right? Because here the trend is simple. We got low, we got a high, we got a low, we got a high, we got a low, we got a high, we got a low. But when you go on the lower time frame, you find that you got a high, you got a low, you got a high, you got a low, you got a high. It changes into a different trend, right? So you get confused, right? So all these should be able to be infused in this, right? So when you're trading as a trader, you're gonna have different views. You gotta have the higher time frame perspective and the lower time frame perspective, because sometimes you find that the lower time frame perspective is giving you sales, right? It's giving you sales. Uh, let's say it's giving you buys, right? At this point, it's giving you buys, and the market is buying here, right? It gets to this point, and you'll be buying, right? It's not against the rules to buy at this point, but you need to know the conditions of the market, right? So that if you're gonna buy here, you're gonna know how to maintain your risk. You're gonna know whether it's a trade that you're gonna come in and out, because you know that the bigger picture is that you're going down, right? The market is pushing down, right? So you incorporating the higher time frame with the lower time frame enables you as a trader to know when to hold a trade and when to scalp a trade, right? So for those that are just starting off, to scalp basically mean to trade for the shortest period of time, right? So if you're gonna trade for 30 minutes or 15 minutes or an hour, right? You're looking at scalping the market if you're looking at those lower time frames of holding a trade. So if you say I'm gonna trade this for an hour, I'm gonna hold this trade for an hour, I'm gonna hold this trade for 5 minutes, 10 minutes, or whatever, that's a scalp, right? So when you're trading both high time frame and lower time frame, you know when to scalp and you know when to swing, right? Because for instance, if you're gonna swing the market, you wanna hold these trades right here, right? You hold these trades out here because these trades are gonna go all the way down, right? So you're gonna hold this trade from this point to this point, which is quite amazing, right? Which is quite amazing. Unlike when you're trading against a trend, which is this right here, right? This right here, it's very much possible you can do that. For instance, we see price break structure here, it comes back, we end on this trade here, on this pullback, it goes all the way, we take our profits here, we jump on the swing, right? So it's very, very important that you learn how to trade different time frames, incorporate them, and build your confluence both on the higher time frame and the lower time frame, right? So on the next module, I give uh, a more clear view of how you can use the higher time frame with the lower time frame to find a trade, right? So in this case, we have got the higher time frame where we see that it's bearish, right? It's pushing to the downside. So we get a swing, and then we have a pullback, and then we have a swing to continue the trend, right? So at the point where we see price heading towards this supply zone, right? Price heading this towards supply zone. So you find that this block, if you're gonna enter this trade, right, with this block, your stop loss is gonna be quite big, right? You find that your stop loss is gonna be quite big because you're seeing this from the higher perspective, right? On the higher perspective, everything is big. So here you're gonna find that you get something like 1,000 pips stop loss, and 1,000 pips stop loss is way too much. So you want to reduce that stop loss by trying to find a lower time frame movement. So let's say, for instance, when you zoom in into the lower time frame, you have this kind of picture taking place right here, right? You got price, right, within this pullback phase, right? Within this pullback phase, you see price breaking structure to the upside, breaking structure to the upside, and then at this point, you see price break structure down, right? Changes character, shifts character, and then you look out for price heading into this previous swing so that you can jump on a continuation. So this is an example how you can use the lower time frame and the higher time frame, right? So that you can reduce your stop losses into the market, hence reducing your risk on the trade, right? So I'm gonna go to the charts right now to show you guys an example of that situation. Okay, so here we have here we got a Nasdaq, right? The Nasdaq chart. This is a 4-hour time frame, hence it's a higher time frame, right? So guys, we see price pushing to the downside. We see price pushing to the downside, and currently price is about to break structure here. So we play this structure, we play this price, and we see what price does for us, right? We see what price is gonna do. Okay, so we see price pushing to the upside, breaking structure here, breaking structure here, changing character. Now we get a confirmation that, oh, we are now in an uptrend, right? We're pushing to the upside. So we say this is price is changing character here, right? And then play, see where price takes us. So we see price pushing all the way, pushing all the way, pushing all the way. Okay, so we see price heading towards significant zones, right? We see price heading towards this zone, and then we're gonna wait and see how price is gonna react off this zone. So we got this zone and that zone up there, right? We got two zones that we anticipate price. We see how price is gonna react off those zones, right? So immediately we see price break past this zone. So this zone is taken out. We're not gonna consider it unless we saw rejection. So if you're gonna see rejections around these zones, then we can try to zoom in, try to find some lower time frame perspective that we can use, right? So at this point, we see that movement right there, right? We see that movement right there. So we go into the lower time frames. We go into the lower time frames, right? So we see prices respecting this, right? It's rejecting off this one, right? So we go into the lower time frames of 30 minutes. Let's try to check it into 30 minutes, right? 30 minutes. So we'll bring this up here, and then we'll see how price plays through. Okay, so price goes into this zone, and then we have price consolidate, not going anywhere, right? We got price doing that, we got price doing that. Okay, so we got some sort of range at this point, right? We have some sort of range at this point. So let me just try to highlight that. Okay, so we have some form of consolidation. Try to zoom in into the 15 minutes, right? Get some form of consolidation. So clearly we see that price has been pushing to the upside, right? Price has been pushing to the upside. From this point, we have price make a low, went for a high, very low, high, low, high, low, push to the upside, and then consolidating currently, right? So let's see what price is gonna do for us at this point. So remember, the higher time frame is that price is reacting off the supply zone, right? It's reacting off the supply zone. So we're trying to see if we can find any ways to sell this market, right? And now we see price breaking structure to the downside, right? We see price breaking structure to the downside. And then at this point, after price breaks structure to the downside out of the zone, those people that if you watch the previous video on price cycle, right? On price cycle, I covered how you can trade consolidation patterns, right? So at this point, we look at the last candlestick, the last bullish candlestick before price broke out of the consolidation, right? And in this case, that's our candle right there. That's our candle right there that we're looking out for. So we're looking at price getting back into this zone, right? To continue to push to the downside, right? So I'm gonna put my short pattern at this point, anticipating price to come here and push to the downside, right? So let's see how it works out. Okay, so price forms liquidity here that should be grabbed, right? So we get some liquidity to look out for at this point, right? We get some liquidity to look out for at this point. Price needs to come and grab that liquidity, and it does. So price grabs the liquidity, takes out the liquidity, and triggers our entry, right? So we see price break even structure there, right? We see price breaking structure there, and then okay, we see price breaking structure again, right? We see price breaking structure again at this point, right there, right? And then when price breaks structure there, we highlight this candlestick right there as our second entry, right? So now we're gonna enter into two positions, right? So all this is happening on the higher time, on the lower time frame, because remember you can't get this on the higher time frame, guys. So you have to make sure you get into the lower time frame and try to find these small moves, right? So at this point, replay, see what price has. Oh, price triggers us in. Okay, it almost takes us out, but it doesn't. So this is our block right there, right? So now we got two positions running. We got the first one, and then we got the second position, right? And then we replay, and price pushes to the downside all the way, hitting our take profits, right? Price to the downside all the way and hitting our take profits. And this is how you do it. So as you can see from the high time frame perspective, this is what you're getting from the high time frame perspective, right? It's just a candle dropping, right? A candle dropping. And if you're gonna enter off the supply zone only, right? If you're gonna enter off the supply zone only at this point, you're gonna have a huge, massive stop loss, right? Check out how big this stop loss is. So this stop loss is like 1,399 points. That's a lot of points right there. That's a lot of points right there, right? But if you can reduce, your thing, you can reduce your time frame, right? The smallest time frame, you can find very, very, very good entries. You can find very, very good entries, right? So yeah, this is an example of how you can use multi-time frame from the higher time frame to the lower time frame to find good trades, right? To increase your probability and to reduce your risk exposure on the market. Yeah, so that's it for this video. Make sure you guys practice, right? Make sure you practice, you backtest more of these setups, look at different things, look at the higher time frame, look at a lower time frame perspective to get a better view of all the perspectives of the higher time frames, and make sure the higher time frame is confluent to the lower time frame. Because at this point, the reason why I saw it is that I saw price heading towards this supply zone, and then it rejects off the supply zone. So I knew that price is gonna respect the supply zone, right? It's resisting off. So all I need to do is just go on a lower time frame, identify change of characters, break of structure, supply zones, and we had a very good pattern, consolidation pattern here that helped us to find a good entry to shoot to the downside. All right, guys, that's it for the video. Have a good one.